Yesterday, I saw an article in the Wall Street Journal. It said that the majority of economists they surveyed say that they expect the US to enter a recession within the next 12 months. Specifically, the survey shows that 63% of that group predict a recession in the next year. That's a big jump from July's 49%. The recession is going to lead to an average of 36,000 job cuts per month. Additionally, these economists expect that GDP, the gross domestic product, to keep contracting during the first two quarters of 2023, which is a shift in their predictions from the soft growth that they projected over the last quarter. So these economists, they expect employers to respond with greater job cuts in the second and third quarters of 2023. So why am I telling you all this? Listen, I'm not a doom and gloom type of guy. Having been through numerous recessions and economic slowdowns, I know as part of how the economic engine of the world, the United States, how we keep on producing and innovating. It can create opportunities for those that prepare, but it can suck tremendously for those that are unprepared to handle it. And that is my point. Now is the time to prepare when you know that it's coming. Now, more than ever, putting your cash into hard assets that produce cash flow is where wealth is made. Historically, real estate has shown to weather the storm of inflationary pressure and recessions. Now, here's three things to consider. Okay, the first, there's little to no correlation to the stock market. That means that even when the stocks are experiencing volatility because of recessions or job losses or whatever, there is very little carryover to the real estate market. Okay, number two, when the economy is in a downturn, people still need housing. So if demand for rental properties remains steady, or even if it rises a little bit, during a recession, there is still a limited supply that the investors that are positioned to be in these assets are going to count on a steady stream of income to continue even through the storm, right? And we're also providing housing for the people that really need it. And number three, a recession doesn't automatically precede a drop in property values. However, if a recession causes a hot housing market like the one that we've had to cool down a little bit, to slow down a little bit, it can open up opportunities for investors to get into these properties at very reasonable rates. Historically, those rates have been tremendously high, and buying a decent property has been tough. Nowadays, I think it might be a little bit easier, or it's going to be much easier coming up. So when I put this whole bulletproof cash flow concept together years ago, it was centered around generating reliable cash flows of income in markets with a great deal of upside. Our team does not do speculative investments. We don't do stocks. We don't do ETFs. We don't do NFTs. We don't go after the new shiny object, right? It's not what we do. I'm not a hater. It's just not what we do. That's it. We're looking for assets that have a proven track record and that have performed. That's what we look for. Anyway, if you want to get into some of these assets and you want to position yourself and your family to protect yourself against the recessionary pressure that's coming up, click the link in the comment. Okay, set a time to talk. Let's get on a phone call. Let's talk about it. All right. Be bulletproof, guys. I will talk to you soon.